Give me some power. What's poppin', YouTube? What's poppin', YouTube? I know what y'all thinking. I said I was gonna drop a video, 2 weeks ago or so, but I got sick and I didn't want y'all to see me down bad like that, so I decided to wait. But I'm back like I said I would be, and this time I brought some gems. We're gonna be covering a few things this video, but mainly it's gonna be primaries and secured loans. So let's get it. Primaries. The word primary is short for primary account holder. It's those accounts when you go into the bank and you open up a credit card account or you take out a loan and you become the person that's primarily responsible for paying back that debt. Primary. It's several types of primaries that we can cover, but for this episode, it's important to know what a CoBar is. CoBar is what they sound like. It's a type of primary that is also going to go into the bank with the main applicant, and their name goes on the loan, their credit gets pulled, and they become equally responsible for paying back that loan. Puts you in the mind of a co-signer, but not quite, in that the co-borrower is immediately responsible for paying back that debt, whereas a co-signer is only responsible if the primary doesn't pay it. But for this episode, the primary and the co-borrower, they're gonna be taking out a secured loan. And a secured loan, they're gonna wanna pay it back, trust me. A secured loan is a loan that's secured and backed by your assets such as your house, car, or some money. The lender holds said asset and they release it upon repayment of your debt. The risk comes when you can't repay that debt, which then opens up the chance for the lender to sell off your asset in order to repay your debt. So you got mortgages, auto loans, loans for land, all of those are commonly used secured loans, but there is another way that people tend to forget about that you can use secured loans for, and that's turning your cash into credit. So I'm gonna show y'all the Davey way. So keep in mind, this works best at small local credit unions. We chose City Credit Union here in Dallas. So Coach and I met at the bank, cash in hand, and stepped to the side to count up our totals. He had $12,000, and I had another $6,600 for a combined $18,600. So he walked to the teller, said, "Excuse me, ma'am, we'd like to take out a secured loan." To which she responded, "Okay, what you gonna back it with?" Too easy, right? Cash. She happily takes out $12,000 and $6,600 combined and places it in a secure savings account and gives us the loan for the exact same amount, $18,600. So rather than taking the loan and, running out of the bank right then and there, Coach decides to take my $6,600, give it back to me, but then takes his $12,000 and pays it right back to the teller as a payment on this secure loan that we just took out. Now, I'll admit, she was a little hesitant during this part of the process, but it was really only because she didn't think of it first. So finally, she accepts the fee and she takes our $12,000 payment and processes it And that $12,000 payment immediately became available right back to Coach out of that secure savings account. Now at that point, we decided it was time to leave the bank. But what we left with was an $18,600 loan that was 71% paid off, leaving us with only $6,600 left to pay on this. A few days later, made a couple more payments, leaving us with just over $5,000 on this loan. And the credit bureau thinks we did this all in 1 month. The result? Well, my credit score went up by 17 points, even though new accounts typically decrease your credit score temporarily. Now, if that ain't good enough for you, it gets a little bit better. This process can be done with up to 3 CoBars. So let's add 2 more people to the mix. Bro, sis. And we combine all our money, and now that $18,600 becomes, let's say, $35,000. Or maybe $50,000. Doesn't really matter as long as it's more than $500. And the process starts over. All 4 of you take your money straight to the teller. Can't forget about bro. And say, "Excuse me, ma'am. We'd like to take out a secured loan too." She knows the deal by now. She takes your cash, totals it up, puts it in a secure savings account. And what else? Well, she gives you a loan for the exact same amount. And what do? Take the money, and we pay 75% of it right back to the teller. And what does she do? She gives us the money right back out of the secure savings account. Now everybody gets their money. Sis gets hers. Bro gets his. Coach gets his. And then I get mine. And we leave the exact same way. 70% payoff. Everybody has their money. Everybody's happy. And we all got credit. And it gets even sweeter from here. This same process can be done multiple times at multiple small local credit unions.
And you can do this using the same cash on the same day.
Now that's sauce.
So next video is probably going to be about Airbnbs or maybe trade lines, but I really want to get into the bank and get y'all some actual footage of the entire process that I was just describing. So y'all stay tuned. It's my birthday today, so I got to get out of here and go and celebrate. Probably catch me some drinks or something. Happy hour.